Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we're talking about the stock market and even a little bit of the crypto market to talk about why these markets are pulling back. Why are stocks in the red today and what is causing this? We're also going to talk about some indexes such as the Dow Jones, the Nasdaq, the S&P 500, and a few others, and we're going to talk about the interest rate hikes that could come from the Federal Reserve, how many interest rate hikes we could see, when we could see these increases in interest rates, and how they're going to affect the overall markets, and will this even help the inflation problem, which is why they're increasing these interest rates. Then we're going to more specifically focus on the technology sell-off for the Nasdaq to see what technology stocks could be a good buying opportunity right now, and then we'll end by talking about cryptocurrencies, mainly Bitcoin, to see how low Bitcoin can go and how the crypto market is going to react to this increase in interest rates. So if that sounded interesting to you, remember to go and smash the like button right now, comment your thoughts down below about why the stocks are red, subscribe if you are new, and now let's get right into the video. So let's first answer the question of why are stocks down today? Why are so many stocks in the red? Well, this is due to multiple factors, and ultimately this is just an extension of the losses that we experienced last week. But the reason for the losses last week, as you probably know, is due to the Federal Reserve, and they did this by announcing their plans to eventually increase interest rates to combat the rising inflation rates. This has absolutely demolished growth stocks and technology stocks, specifically stocks that are located in the Nasdaq, which have had a phenomenal last year and a half. However, certain industries and sectors within the Nasdaq have been hit especially hard, including several companies that sell electric vehicles, such as Tesla, Xpeng, and Nikola, just to name a few. We can also see many betting or sports betting apps that have also felt the heat lately, such as Caesars and DraftKings. Innovation stocks have also been hit extremely hard, and I'm referring to Cathie Wood's ARK Invest stocks, and it doesn't even really matter which ETF you pick. All of the ARK ETFs have been hit extremely hard lately because all of these growth stocks and innovation stocks are pulling back radically, which is really not looking good for ARK Invest. However, in the long term, they should all pan out. Investors are also very scared right now because they think that the government could institute more lockdowns on top of rising interest rates, and we all know what happened last time that we ended up locking down, which is one of the things that caused the entire stock market to pull back. Now, in other news that I found very interesting is that during this, not many people are talking about PayPal, ticker symbol PYPL, and even though PayPal has pulled back quite a bit, and to me, it's a pretty good buying opportunity right now, they just came out with some news that they plan to release their own stablecoin, and a stablecoin is basically a cryptocurrency that is normally pegged or attached to some other asset class or even a fiat currency such as the US dollar. So it's going to be very interesting about how well or how successful this could be, but I haven't heard many people talking about this. But now I want to talk about some indexes such as the Dow Jones Industrial Average, the Nasdaq, and specifically the S&P 500. For the Dow Jones Industrial Average, it has fallen around 390 points or 1.1% to about 35,841. For the S&P 500 index, it has declined around 55 points or 1.2% to around 4,622, and the Nasdaq Composite gave up around 221 points and fell more than both of these by falling around 1.5% to 14,715. However, I'm not surprised that the Nasdaq has pulled back so much because it has been on an absolutely amazing bullish run, and this is just today. We can see that there was a huge initial dip and then the Nasdaq index eventually started to recover some. But across the majority of the markets, we can see that the majority of the markets are down today, no matter what index we look at, and of course, this is due to the prospect of the Federal Reserve increasing interest rates as soon as March. And later we're going to talk about how much these interest rate hikes could be, how often will they be implemented, and if there's any projections that they could raise these interest rates even before March. Currently, researchers say that the Federal Reserve has fallen way behind the curve in terms of battling and combating inflation because their easy money policies have allowed inflation to creep in, which is why they have to take such drastic measures such as increasing interest rates to combat it. Goldman Sachs also thinks that the Federal Reserve will increase their interest rates in 4 segments. It's not just going to be a one-time thing that they do in March. Goldman Sachs believes that they will do this at 4 different times throughout the entire year of 2022 into 2023. However, we don't know at what intervals these will be done at. The soonest interval we know of is going to be probably likely in March, according to the Federal Reserve. This is no surprise that the Federal Reserve is doing this because the latest labor report that came in on Friday for the jobs that were attained in December came in at 199,000, and this was worse than anticipated, which has scared investors even more. Therefore, the Federal Reserve is going to double down and tighten even more on their financial policies to battle this inflation, which may hurt the market sentiment and projections in the short term, but over the long term, it could be okay. So far, we only really know of 3 interest rate hikes from the Federal Reserve, so I don't know where Goldman Sachs has gotten their 4th one from, but I believe Goldman Sachs, and I think that it could be 4 in total, but we're gonna have to see. According to BlackRock, specifically their global chief investment strategist, he says that the central banks, which is also the Federal Reserve, are moving away from their stimulus, and now they are restricting levels by increasing interest rates, and he also believes that there will only be 3 interest rate hikes, which is different than what we received from Goldman Sachs. One of the problems is that when people think that interest rates are going to increase, and they see that bond yields on the 10-year Treasury notes are rising at an astounding level at around 1.78%, which is one of the biggest weekly gains since September of 2019, this is a cause to be scared. However, I think the uncertainty and doubt and fear that is injected into the economy right now is a little overblown. Now, I do think we could see more red days in the future, but I don't think it's going to be anything as drastic as an entire market crash or a gigantic sell-off. We will have minor corrections and a few pullbacks as investors start to stomach the various interest rate increases from the Federal Reserve, but beyond that, it's no wonder why investors are pulling money out of the stock market and putting it into 10-year Treasury notes because the interest rate is so high, coming in at 1.78 like I said earlier. This is almost guaranteed money that you're going to get back, and this blows out any high interest savings account at a bank that I can think of. So instead of people putting their money in banks and then using that to transfer to their brokerages to invest into stocks, they're just investing into 10-year Treasury notes, which honestly is pretty smart, especially if you think that the stock market is going to continue to fall for the short term. More about technology stocks, we can see that if we compare the NASDAQ to the other indexes, we can see that the majority of the S&P 500 and the Dow Jones are tracking with each other, but clearly the NASDAQ got hit the hardest. To me, this is a fantastic buying opportunity to invest into high growth and very innovative stocks. But with that being said, I want to say that this could continue if government bond yields continue to rise, so please be aware of that and stay safe. The manager at Eagle Asset Management even said that clearly tech was overdue for a correction. With this pullback, we are seeing valuations move into more reasonable territory, and honestly, I tend to agree with him because the NASDAQ has been on an absolute tear and extremely bullish, and we haven't really had a major pullback like this in the last couple of weeks. So honestly, pullbacks like this are healthy, and it creates a healthy economy. Everything can't continuously go up all the time. We need to do a pullback, and that's just a part of the market. Investors are also eager to see the earnings season that's coming up for many stocks and many financial institutions such as JP Morgan, Citigroup, Wells Fargo, and the price of Bitcoin specifically has fallen to around a 3-month low on Monday morning, but experts still forecast that the cryptocurrency drawbacks and falls could persist in the coming weeks. So it's not like it's going to be over anytime soon. So even if the stock market recovers, the cryptocurrency market could continue to fall in some instances, according to experts. Bitcoin fell as much as 5% all the way down to below 40,000 per BTC. This would bring Bitcoin's total loss to around 12%, and this is expected to grow even more in the coming weeks. Experts say that the world's largest cryptocurrency, again referring to Bitcoin, could continue to fall until the broader market can digest the interest rate hikes from the Federal Reserve, and it's going to be the same for the stock market. Investors are just going to have to get used to this because this was a long time coming, and honestly, these interest rates should have happened a little sooner than they already did. The reason why investors are reacting so radically right now is because the interest rates weren't supposed to begin until 2023 to 2024. So now that it's been moved up 1 to 2 years, investors are absolutely freaking out right now. And these price shifts and volatility within the cryptocurrency market and the stock market could amplify. However, there are also some very positive predictions considering Bitcoin, and one comes from a UK-based digital asset broker at Global Block, and he says that Bitcoin will hover around $40,000 even if the CPI report on Wednesday shows inflation rose more quickly than expected last month, because again, Bitcoin is supposed to be a great hedge against inflation because cryptocurrencies are decentralized and they're meant, at least Bitcoin is, to keep their purchasing purchasing power. On the other hand, we have the CEO of financial services from Galaxy Digital, and he told CNBC that the sell-off could push Bitcoin as low as $38,000 per BTC. But Bitcoin's not the only cryptocurrency that's falling right now. As we can see, Ether, Binance Coin, and Solana has also fallen around 5%, which is pushing their overall losses to around 20% each. But I'm a long-term bull on both the stock market and cryptocurrencies, and I tend to agree with this particular analyst, who's a senior market analyst, and he says that the long-term outlook is still bullish for both the top two cryptocurrencies, referring to Bitcoin and Ethereum, or Ether more specifically, but the short term is looking ugly, and I completely agree with him. We're gonna look back on this and say, oh my gosh, I wish I would have bought during this perfect opportunity while the stock market and the cryptocurrency market are pulling back. But this would also depend on whether you think the market is going to fall even further, because according to Goldman Sachs and the co-head of the global foreign exchange at Goldman Sachs, he still thinks that the cryptocurrency, referring to Bitcoin, could go all the way up to $100,000 in the next 5 years. And this is clearly possible, because we have seen Bitcoin prices over the last 5 years increase at around 4,300%, which is absolutely astonishing. However, the cryptocurrency is still down around 40% from one of its record highs of around $69,000 per BTC. But I want to hear your thoughts on the stock market. What do you think, and what is your strategy during this very volatile time in the stock market due to the policies that the Federal Reserve are instituting? What do you think is going to happen with the cryptocurrency market? Are you even invested into cryptocurrency? How are you hedging your investments against this very bearish pullback? And of course, I want to know if you've liked the video. So remember to go and smash the like button right now, subscribe if you are new, comment your thoughts down below, and I will see you in the next YT video.